Welcome to another exciting episode of The Trading Bell. This week on the program, we are coming to you from Ruaka. This is Kiambu County, where we'll be speaking to Dr. James Mworia, the CEO of Centum Investment. It's one of the companies that has posted some very interesting results, 7.2 billion shillings in net profits. And of course, they've declared a very interesting dividend for their staff. We'll be taking him to task on just what are they doing that other companies are not doing to survive this COVID-19 pandemic. Well, let's take a look at his profile as we get into the interview. Dr. Mworia is the Group Chief Executive Officer and the Managing Director of Centum Investment Company, a position he has held since October 2008. Dr. Mworia serves on several boards, including those of CDN Bank Limited and Almasi Beverages Limited, where he served as Chairman, Nairobi Bottlers Limited, Isuzu East Africa Limited, and Lewa Wildlife Conservancy. Dr. Mworia also serves as a Director of Centum Exotics Limited, Investpool Holdings Limited, Centum Development Company Limited, and Two Rivers Lifestyle Center Limited. Dr. Mworia was also appointed as the Chancellor of Machakos University in October 2016. Dr. Mworia holds a Bachelor of Law degree from the University of Nairobi and a doctorate in business from Machakos University. He is an advocate of the High Court of Kenya, a CFA charter holder, a Chartered Global Management Accountant, a Fellow of the Kenya Institute of Management, and a member of the Institute of Certified Public Accountants of Kenya. Thank you, sir, for making time for us on the Trading Bell.
Thank you, Abby. It's a pleasure to host you here.
Thank you, sir.
Yeah.
And quite an interesting time to be in this space, especially now that we're seeing the COVID-19 pandemic, of course, having a big toll on the economy, at the same time, just changing how people work. I don't know, what has been the case for your company?
Yeah, I think just like the rest of the world, we've had to adjust to the COVID environment. Fortunately, at Centum, we had invested in systems a few years back.
Yeah.
So it was very easy for people to adjust from working in the office to working at home. And in fact, when we did a survey amongst the staff, more than 70% thought they were more productive because the tracking mechanisms were probably enforced with a lot more discipline, people meeting in the morning, in the evening, sort of to see where they were. Our portfolio companies, it has been mixed. Some have continued to do well. Some have been affected, largely because their client base is not operating. An example is Longhorn, where schools are closed, and they're not just closed in Kenya.
That's true.
COVID has unfortunately affected the whole world. So although we have diversified the market to the rest of Africa, so for, they've been affected. They've tried to switch to digital, digital platforms. So there's been an impact on the business, and there's also been an impact in how we do business. It varies. It varies business by business.
Yeah.
Yeah.
And speaking about how you've taken precautions as a company, matters to do with, for instance, having systems in place. Has this reduced the head count at the office? From my basic count when I walked in, it's not the usual office you'd get.
Yeah, of course, a lot more people are working from home. So not as many are coming to the office. So typically you come to the office if you have need for a face-to-face meeting, or if you are moderating a meeting. When we have board meetings, you're the one running the presentations, you come to the office. But with the investments we have in systems and technology, you can access the information from anywhere. So there's no real particular requirement that our staff come and work from the office.
Okay.
Yeah.
And Mworia, you and I agree that this pandemic has literally changed how we perceive technology as companies and how employees can be empowered to work from home. What will change post-COVID from your end of things?
It's too early to predict because also when there's a sense of the team kinship when people are working together, which is not the same when people are working from home.
Yeah.
So how much you can sustain productivity in the long term I think it's still debatable. I think, however, I think that we've gone into online meetings which have turned out to be very effective. So probably travel will reduce. You'll see greater use of online platforms. We conducted our investor briefing on a webinar platform, and it worked very well. You see, before, it would have been very difficult to persuade people to come on the webinar to have the investor briefing there. We are going to have our annual general meeting this year on a webinar platform. So it is possible some of those things will persist.
Oh, yeah.
Because also the costs involved in hosting an annual general meeting, hosting 2,000 people, then you have a lot of cost savings through technology. So we've been forced to adapt, and I think some of those habits may persist even post-COVID, just because they make sense from a business perspective.
Okay.
Yeah.
All right. Indeed, only time will tell how this whole issue will develop in the coming days. Let's talk about the numbers. Yeah. Quite an impressive return when we look at your numbers. You posted a 79% jump in your after-tax profits, hitting 7.4 billion shillings. And of course, all this coming in the wake of an economy that is, quote-unquote, still struggling with the effects of COVID.
Yeah, we had a good performance. I think under the circumstances, it was good performance. Growth in profitability, driven by growth in investment income. We've done a lot of work around cost rationalization. And that growth was despite us reviewing our portfolio. We took a number of impairment charges on a range of assets, largely because we want to be conservative. So had we not done that, the growth would have been a lot higher. I think the other exciting thing is that we've done a lot of work in terms of balance sheet consolidation, paying down the debt, which was one of our critical strategic objectives. We also built up the liquidity base of the company, which was another of our strategic objectives. And we announced 800 million shillings in dividends. I think for somebody looking at Centum, I think the thing to realize that we tend to be our performance is, what we are achieving today is because of work that has been done on the last, say, 2 to 3 years. So you may have COVID now, but it may not necessarily have a large impact on our performance. So we came up with the strategy 4.0, which we launched last year, April.
Yes.
And when we met last, I think I shared with you, last year actually, I shared with you what we were planning to do. And so because you have a nice runway and you have a plan that you can work towards, then your performance can be a bit more predictable. I think the COVID-19 sort of economic shock sort of amplifies the importance of what we're doing around balance sheet consolidation.
Yes.
When we announced that we intend to pay our debt down and build up liquidity, a couple of investors were a bit skeptical. They thought we were losing out on the upside. Why would you be paying your debts? Why not just keep the debts and invest in the market? But we had taken a view, and I think I spoke to you and I've spoken to a number of investors earlier, that from where the business had come from, when I took over the CEO in 2009, it was a very small business. Yeah. We had taken a bit of risk to scale it up. We had reached a level where we were dialing down risk, sort of having less risk, having a balance sheet that was less leveraged, that was less reliant on capital gains from a day-to-day basis, and then a greater focus on cash flow generative sort of investments, as opposed to ones where you are looking on banking on huge capital gains, largely because of where we saw the economy going, and also largely because we wanted to maintain our dividend and even grow it. Now, COVID shows that it's critical for the survival of business to try and build resilience in your balance sheet. So had we not taken some of these steps, which we started taking way back from 2017, sure. Today Centum would have been a lot more exposed with COVID than it is today.
All right.
Yeah.
And you bring up a very important perspective around insulating your books from, of course, further adverse effects in case of an economic meltdown. I did see through your numbers, when you look at the revenues, talk to us about how the business picked up in terms of the revenues. And you have a very interesting dividend payout. We've seen some companies postponing the payment of the dividends. Will you be reconsidering at some point?
No, on the dividend, no, because one of the things we've done is that we have set ourselves a policy to pay. So there were a couple of changes we made.
Yeah.
One, on the cost side of the business, before we used to work on a cost to asset ratio.
Yes.
We shifted to a cost to cash flow ratio. So we've been able to reduce our expenses to about 30% of our cash inflows. Then we also wanted, and the dividend policy also pegged on recurrent cash flows. So it's the higher of 30% of the previous year's dividend. So with our recurrent cash flow, we're able to sustain our expense base and our dividend base without having to resort to capital gains. And that was the real objective of Centum 4.0. And the other thing we did is switch the business, because the business has to respond to the economic environment you're in.
Sure.
The economic environment, the global economic and even the national economic environment we're in, 2009, 2010, 2011, 2012 was a bullish economic environment. So we then took advantage of that to pursue capital gain-oriented investment strategy. And that saw our balance sheet expand from what it was then less than 6 billion shillings to almost a tenfold growth. However, the economic conditions have changed.
Yeah.
And so you have to pivot, because those opportunities for those capital gains are not there.
Yeah.
And so we pivoted now more towards cash flow generation. So if I look at our marketable securities portfolio, for example, where we've placed quite a bit of the assets we exited, 90% of it is in fixed income securities. So as opposed to equities, 10% is in equities.
Yeah.
Previously, it was 90% in equities, 10% in fixed income, because you're pursuing capital gain. So fixed income don't give you as high a capital gain as equities, but they'll also not give you a capital loss, and you'll get a recurrent income. So with or without COVID, you're still expecting, you're still sort of making that kind of cash flow. On the real estate side, I think we've come through a very lengthy learning curve, quick learning curve.
Yeah.
And so we pivoted towards a client sales-led model, understanding what the customer wants, developing, putting the product in the market, selling it to them, and then building. So if you look at what we are currently developing, about 1,400 units, 1,000 are sold, so about 70%.
Yes.
And actually what is not sold...
This is Vipingo?
This is across the entire portfolio.
Okay.
Projects like Vipingo, they have sold 90% of everything they're developing. So the reason it's 70% is because of the newer projects we launched. So we are pursuing a client-led model as opposed to a development-led model where you develop and then go and sell. And even during this COVID situation, we've not seen a single client drop off, and in fact, they're still selling. So what might happen with COVID, if it persists, you may see a slowdown in the pace of sales. Today we are selling about 60% of what we were selling pre-COVID, which is still good, because with the COVID and the lockdown, I actually suspected it would come down to 10% or 5% or 0, but we're still doing about 60%. But also because our model is not one where you look at high margins. It's a model where you look at volumes. So you're a price leader. So whatever product we come with in the market is very competitive. And so it makes sense to the buyers. You need to give the buyer the sense that they got a good deal. Yeah. But it makes sense for us because you're not selling 1 or 2 units. You're selling them in the hundreds.
In bulk.
Yeah, in bulk. The private equity portfolio, I think there the performance has been mixed as far as the existing portfolio is concerned. Some of our businesses have been affected because of the measures that have been taken to contain COVID. Schools have been closed. That has affected companies like Longhorn. International travel has been affected. That has affected companies like NAS. But I think the positive thing is that these companies are market leaders. So my expectation is that when the market, when the economy reopens, And I think it's going to reopen because you've seen it reopening in other parts of the world that got into COVID before us.
Sure.
Because Africa was one of the last countries to get into to be affected by COVID.
Correct.
So it's also understandable that we'll probably be one of the last parts of the world to come out. Yeah, when we come out and travel resumes, schools reopen, because those are also the first industries to reopen.
Sure.
Schools are the first to reopen. Travel is also going to come back. I think you'll see those businesses picking up. I think for me what is exciting is that we made some critical exit decisions pre-COVID, moved to cash, and so we'll be looking at making new investments in the private equity space during the economic recovery phase. When you look at the returns on the private equity portfolio, the timing of the entry is critical, especially your entry pricing. So we are now seeing multiples having come down because of the equity risk premium has gone up, and also you're seeing earnings have come down. So entry valuations are going to come down, and that is critical because then you can ride the wave. If you come in too expensively, research shows that about 60 to 70% of your return is determined by your entry price. So I think we'll be coming into the market at a time when valuations have corrected, and also there's probably less liquidity chasing these opportunities. So we're going to be a selective buyer, active buyer. We are talking to a number of companies, but these things take time, and you have to be very careful what you invest, because if you make a wrong decision, you live with it for a long